What we found when I first started practicing was that new companies, especially those with smaller budgets, would ask us to use as little paper as possible. And so they would want an AML program that was everything brief. And while that's laudable, one of the things that we did that I now count as perhaps an oversight was we often merged the OFAC compliance controls into the AML program. So you had an AML program that would include somewhere in it a chapter or a section on compliance with sanctions. And I found over time that the clients ended up short shrifting their compliance efforts for sanctions. They were so focused on the day-to-day work of AML, which is more work, that the OFAC prevention measures that they would put in place were sort of plug and forget. And because of that, they weren't audited very well, they weren't often monitored, and they weren't done very carefully. And while it's rare to have an OFAC problem, when you do, it is existential to the company. It is a very expensive thing to fix, it is scary, and the penalties are large, and it can be very frightening for a company. So I think one thing I would leave people with is when you go into a regulated business, all the attention will be on getting your licenses and putting up all your compliance for those licenses. But don't forget that OFAC has really taken a leading role lately, and they're becoming far more vocal now than they used to be about compliance. And they're putting out guidance, and they've engaged the crypto industry in particular head on. And frankly, I think they've done a wonderful job. The OFAC staff they clearly waited to understand the technology and give guidance that actually makes sense with respect to the technology. And it also acknowledges some of the limitations of that technology, so that if you can read their guidance and follow it, it makes sense. Compliance with FinCEN rules is a little bit harder, and they have been focusing more on the problems associated with deficient AML programs, which I think begins with faulty risk assessments. And risk assessments are the building block of a good AML program. When you start in a regulated business, when you register with FinCEN for the first time, or you have a money transmitter license, or you get into a business where you're handling other people's funds, you have to have compliance programs that are properly tailored to the risk that those funds will get lost or misused, or that your services will be used for unlawful purposes. And that risk is different depending on your business. It's different based on your jurisdiction, your geographic location, the types of customers you have, the amount of money you're handling, the way you're moving the money. And one of the reasons that AML regulations for money services businesses, as opposed to banks or other differently regulated institutions, are so flexible, and the language as a lawyer is very squishy. The regulations don't have a very specific set of boxes to check for them. The reason for that is that MSBs run the gamut of sophistication, customer base, type of service, and so it needs to be flexible to enable someone to have an AML program that's rightly fit to the demand of stopping crime through the service. I've seen many companies build risk assessments by downloading a template from the internet and checking boxes, and that is a lousy way to do it. The better way to do it is to put the right people in the room. And what do I mean by that? I mean people who understand the business, who know the customers, and they know where things go wrong, and have a frank conversation with them about when does our service not work well? Who misuses our service? What are some of the embarrassing things we've seen happen through the service? Or what are ways in which our service is vulnerable to misuse? That becomes the focus of your risk assessment. I'm also an opponent of numerically scored risk assessments. I know they're very common in the industry, but I think that's wildly inaccurate, because numerically scored risk assessments often reflect a garbage in, garbage out result. If you don't really know how to quantify the inputs, then putting it through some sophisticated algorithm will just output data on the bad inputs. I think it's better to have a narrative risk assessment that actually assesses in detail how your service might be used for bad purposes, including anecdotal examples of things that have actually happened. And then keep it simple. Use a risk score that is, medium, low, or high based on sort of the quality of those controls.